digital payments across all areas of the economy as millions of transactions that normally took place in store shifted online. Moving forward, digital experiences will define consumers' commerce journeys, both online and offline, as consumers have come to expect digital engagement in all channels, whether physical or virtual. I'd like to welcome Peter Cowan, Managing Director of PayPal Australia, to discuss these changing consumer expectations and behaviours, how accepting and managing payments has changed, and the technologies and trends that you need to understand. Welcome, Peter.
Thank you.
Would you like to stand here? I can get you a ready.
This is perfect. Oh, let me go back one. Morning, everyone. Thanks for having me here today at the Intersect conference. Great to be here to talk about the future of payments. It's actually my favourite presentation. I've been doing it for a long time now. Today I'm planning to talk to you about some of the changes that we're seeing that have been occurring kind of over really the last 1 year, but I'll rewind actually to 25 years at one point. Talk about some of the key trends that we're seeing in payments, then talk a little bit about PayPal's response to that, give you some insights into our strategy as we respond to some of these trends in payments. But you know, as I was reflecting on this, as I said, I started my payments journey 25 years ago, and it's been a huge change in the payments landscape, obviously, over that time. When I was talking to one of my colleagues here, Kathy, around it, so 25 years ago, when you mentioned to people you worked in payments at a barbecue, everyone sort of walked in the other direction, and I was pretty unpopular. You know, these days, when you mention payments, everyone wants to talk about it, whether it's digital wallets or, you know, the latest stock they wanted to invest in or some other advice around payments. So it's become incredibly more front and centre and more popular over the years. But if you even just look back 5 years ago, I think we tend to overestimate the change we'll see in the next 12 months, but underestimate, you know, what would happen over 5 years in payments. So I just reflected back, and sort of 5 years ago, credit cards were actually the dominant, you know, payment type here in Australia. And you have a look at the rise in debit cards over the last 5 years, and it's just incredible. You have trends like buy now, pay later that wasn't even a thing 5 years ago, and yet here we sit today where it's a kind of major part of our local payments market. You know, digital wallets, particularly around NFC, you know, in-store payments were pretty much non-existent 5 years ago, and yet here we find ourselves now. And then one of the interesting ones for me is kind of QR codes, which, you know, 5 years ago I would have told you no one would ever use a QR code in Australia. It was a technology better served for emerging markets, yet here I am every time I go out to a restaurant, bar, cafe, and using a QR code. So, you know, how much the market's changed over the last 5 years, but particularly when we look over the last kind of 12 months, and if you look at the first, really, second quarter, those 3 months of last year, we had this huge paradigm shift around digital payments, which was driven by COVID. You know, what we believe is that over that 3-month period from kind of March to June last year, there was this secular shift towards payments that effectively moved the market forward sort of 5 years. There was that trend towards digital payments, but it accelerated just incredibly rapidly over that period. And what we've seen is things haven't gone backwards. So whilst now lockdowns are pretty much behind us, you know, touch wood, we're in a position where the volume that shifted to digital has stayed in digital, which is just an amazing trend that we've seen taking place. When you kind of unpack that and talk to consumers around it, there's just some key themes that are driving it, right? It saves them time, it's convenient, it's easy, gives them more choice, gives them access to deals, and we're not going back. And you know, one of the examples is the kind of pet food example that I like to use, which is, you know, I've got friends who used to go and buy the kind of, they've got a big dog, buy the giant bag of dog food and cart it home, you know, with them once every couple of weeks. During COVID, you couldn't really do that. They ordered it online from one of the various pet warehouses. It was delivered to their door pretty simply. You didn't have to wrestle the bag, make the trip. Well, why would you go back from that? And we're seeing that consistently applied across the verticals that we process in. Globally, there's also this big shift towards kind of cashless that you're all seeing, I'm sure. And you've got countries like Sweden that are actually talking about going completely cashless by 2023. That's only 2 years away, right? Pretty amazing. Yet you're also seeing a kind of counter trend developing, which is, you know, unbanked people in certain areas, and are they still going to have equal access to services if you're unbanked? So you've got this digitisation trend that's being balanced against an inclusion trend, and very interesting to see how that plays out. I think locally we've looked at sort of consumer research around both businesses and consumers, around cashlessness. And as we stand today, around 20% of consumers and 20% of businesses are actually telling us that they're already completely cashless. So that kind of trend towards digitisation and cashlessness is definitely coming. We've asked both cohorts, the businesses and consumers, what their view is of of the market by 2025. And they're both actually expecting that to about double. So in Australia, you have around 40% of consumers and 40% of businesses are expecting to be kind of completely cashless over the next 4 years, which is, an interesting trend. As this move kind of towards digital and away from other payment types occurs, it's really driving the need to ensure you've got those safe, secure, convenient, ubiquitous experiences that are being built, and that really forms the kind of the core of my presentation today, which will dive into some underlying trends that we're seeing that tie off this digital paradigm shift. The first one's around digital first. Now, I know I'm speaking to a FinTech conference and all of you probably think digital first anyway, but as we're talking to businesses, billers, government organisations, all have a digital, or most have a digital strategy, but very few of them are actually thinking digital first, would be my observation when we're talking to them. And the conversation we're having is very much that they should pivot to be looking at digital first. It does give you the ability to kind of capture this new volume that's moving towards digital payments. It's interesting, when I talked about digital first and built this slide, a couple of years ago I probably would have said mobile first. And I think if I go back and put my kind of past life as a product guy hat on, when I was talking to people who were designing digital experiences, I'd always get them to present experiences on the mobile version because we looked at our stats and everything was kind of pushing towards mobile devices. Interestingly, when we ran our e-commerce survey last year, what we saw was that the trend had actually reversed back towards desktop slightly. So if you think about, more people had actually been spending kind of on the tram if you're down here in Melbourne, or on the bus or the train, potentially back where I'm from in Sydney. More and more people were kind of doing transactions on their mobile devices while they were in transit or in those moments, those gaps in their lives. And what we saw last year was interesting, driven probably by COVID lockdown, right? People are sitting at home, they're at their desktop working, so when they get their breaks, they're actually doing commerce on their desktop rather than on their mobile devices. So interesting to look at that as you're starting to build a digital strategy and think about, well, what should we be building for in the future? What does the future of work look like? Will we all be going back to offices, or are half of our customers still going to be working largely remotely, working on desktops? So do you need to balance experiences across the different platforms a little more as you look to build strategies moving forward, which is an interesting space. The next one for me was around retailing redefined. And there's been some shifts that have been happening here that I think were incredibly accelerated through last year. I think that kind of omni-channel of retailing has been a general theme at these kind of conferences now for close to 10 years. But not a lot of people were kind of doing that well. And I think certainly over the last 12 months, there's been a much greater focus on what that new retailing experience is and how you can actually genuinely drive consistent experiences across all of the channels that you provide, particularly when people are jumping between channels, ensuring that they get a consistent experience. So by that I mean, if you buy online, is the pick-up in-store experience pretty seamless? If you buy online, can you return in-store, and is that experience pretty seamless? I actually met with a large retail group yesterday, and they're actually contemplating one that I hadn't really thought about much in the past, but it's actually, if I buy online, buy in store, can I return online? So they're looking at someone who's actually bought a pair of shoes, taken them home, not quite what they wanted, they actually want to now return them. Can you actually return them by delivering them back to their online facilities and then getting a refund through their channels that way? So quite interesting to see how people are thinking about building those new experiences, and that omni-channel is still probably one of the key things that I think people could do a better job of. Pardon me. The next area is around frictionless retailing, and certainly 2 years ago, kind of everyone was pushing towards a view of kind of making sure that payments was completely frictionless in people's journeys. And if you think about the Uber example, that's kind of was always held out as the benchmark of frictionless payments, where you don't see the payment occurring. What we're seeing now, and more often the conversation we're having with customers, is around the balancing of choice with frictionless, and people actually looking to break frictionless experiences to embed choice in the right areas to actually drive better customer satisfaction and outcomes. So an example for me is, you've probably all seen the pilots that are taking place with kind of with retail stores, where you can walk in, AI identifies who you are, you take a basket of goods, identifies what you've got, you walk out and the payment happens, and it's kind of completely frictionless. I think if you think about that with more of a consumer hat on, where do I get the choice of kind of how I want to pay in each of those examples? So I think about the supermarket example, and I may be going down one day because I'm picking up supplies for the office, and I want those to be charged to my corporate card. I may be going down another day to get something for lunch that I want on my debit card. I may be going down, to do a big shop because I'm in a share house and I want to use an instalment plan to pay for that. Well, is complete frictionless really what the consumer wants, or do they want some choice embedded within the frictionless experiences? So that's been a really interesting pivot for me over the last kind of 12 months, where people are looking at choice in much more detail as they define their retailing experiences. I also mentioned QR code earlier. I've been a QR code doubter for the Australian market for some time, mainly because everyone's so habituated with NFC. Trying to get people habituated to use a new payment type is notoriously difficult. However, I'm starting to change my position on that because, obviously the habituation we're all driving through QR code check-in, I think, is getting everyone used to the technology. My parents in their sort of late 70s are now, avid QR code users, which, I would have never said was possible 5 years ago. So when you start looking at the way that you can actually expose different digital services through a QR code-based payment device in store, I think it is actually quite exciting and an interesting space as we think about what the future of retailing could look like. The next trend for me is this one towards super apps, and I'm sure you're all like me. You've got 50 to 60 apps that sit on your mobile device, but you only use kind of 8 to 10 of those on a regular basis. So the battle is probably, rather than people creating more apps, how do people actually create more relevant apps that include more functionality that people are looking for and looking to use on a regular basis? And our view is that financial services and payments is absolutely, a core value proposition which you can use to build kind of incremental product functionality around. And I know this is something many are working on, but in our minds, things like shopping, makes logical sense tying to payments and financial services. Things like investing makes logical sense to tie, as does financial management. So that super app and the rise of the super apps is a very interesting space for us. Contextual commerce is the next. Now, so what's contextual commerce? It's basically being able to buy in the context you find yourself in, rather than needing to leave that context and go to a different location to make a purchase. So the starting point for me is, most people probably use social media. If you think about where social media was a few years back, people would pay a lot of money to an influencer to say, wear, promote, show their goods. But you were then relying on the consumer to then go and search for that product outside of social media, find a website that offered it, or go to a physical store that offered it and make the purchase. So contextual commerce is moving away from that and actually starting to push the buying back into the context that the consumer's in. So we asked a bunch of consumers here in Australia, who'd actually used contextual commerce in the social media sense, and it was about 25% have actually used that. If you go down to the younger cohorts, it actually jumps up to higher than 35%, closer to 40% have actually used contextual commerce in a social sense. Some of the other things that we see driving off this are things like being able to use photographic search to try and find an item. Shoppable video is an interesting space. So I think we're seeing about 20% of our customers who say they've used visual search. The next generation for me is the ability to actually look at embedded content within video. So that could be a product demonstration today, but I think the bigger opportunity is, as you've seen the market pivot towards streaming services away from traditional kind of television, the way that you can place media and do selling has changed. And for me, the opportunity is, how could you create a way to actually have viable content within streaming content that doesn't really interrupt the flow of the programming, but if someone sees something they like, they have the ability to buy that really easily and quickly from within the context that they're in. And if you think about people who are probably younger than me are typically consuming content on a laptop device, a tablet, how could you actually allow them to make purchases from within that context? The final piece on Contextual I was going to cover off was Internet of Things, and this is a huge area for me around where sort of payments will go. The example everyone always uses, which I don't like, is the kind of fridge that tells you when it's low on milk and orders it itself. When I think about IoT, I actually prefer to think about something like your car. Like, you think about how much life admin you have to do around owning a car, and how much easier you could make if that car could do some of that work for you. So, buying fuel, you come into the petrol station, you're able to just fill up and drive away and the car pays for it for you. Parking, the IoT device recognises your car's got embedded payment credentials and it pays for its own parking for the amount of time that you actually spend there. Things like insurance, the car knows exactly where it's gone, when it's gone, how much distance it travels. Could you build new insurance experiences where the car itself is interacting with your insurer and you're paying as you go based on usage and risk? So if you park on the street, it could cost you more than if you parked in a garage, or if you park in a high-risk area, it could cost more than parking in a safer area. And that stuff all happens real time from the car to your insurer. And then the final piece of things like servicing that you could also do in the same way, where the car identifies it's time for a service, there's something that's broken that needs to be serviced, and actually interacts with the service centre to book you in, pay, do all of the logistics for you. So for me, that's the final piece of Contextual that's quite exciting. Then, look, the final piece on trends for me is the changes that are occurring around financial systems globally. I know there's a few of you in the audience who are quite interested in a few of these topics, but open banking for me is the first area, and you can see, over my whole career talking to bankers, the greatest fear has always been the concept of disintermediation from the end consumer. And you have a look at what open banking provides, and it's an opportunity for fintechs to provide disintermediation from banks to their end consumer. So I know many of you are building solutions that are based around that. Consumer data right's a great first step. I see that there's now some looking at payment initiation API, which is kind of equally exciting and provides access to a whole range of new solutions that can be built on those rails. Overlay that with kind of this rise of real-time payment networks, and that's a huge secular trend within payments globally. Obviously, once again, provides an opportunity, particularly with things like the NPP mandated payment service, to start to reimagine how payments can be facilitated. And in my history in payments, when these domestic networks that do the same thing pop up, then historically they all then start to connect to each other, and you start to get really interesting global ecosystems built out around it. And I think that's logically where real-time payments will find itself. I think it's still propagating in many markets globally, but it will logically come together reasonably quickly. And then the final piece for me is around this kind of crypto and digital currencies. So we're seeing, obviously, the initial shift towards crypto, and then the question remains, and I'll talk about it in our strategy in a moment, is crypto a store of value or is it a transactional currency? But then you've also got the push from central regulators and central banks into actual digital versions of fiat currencies, which I think is absolutely a transactional use case for sort of blockchain technology and for digital currencies generally. And I think that will also change the way that we buy and pay. So that was it in terms of the kind of trends that we're seeing. What I was just going to focus on for a minute now is PayPal's kind of response to that and the way that we're looking at our solutions with both a consumer and then later a merchant lens on. But we're building out our sort of next generation of the PayPal wallet. As I mentioned, payments is really going to remain the core for us. But what you'll see us doing is continuing to enhance the functionality available within the wallet for payments. And by that I mean, a good example is our Pay in 4 product that we're launching in June here in Australia, and we've launched across a number of global markets over the last 6 months. It gives the ability to actually pay now or choose to pay, over an instalment period later. In other markets globally, we offer, unsecured lending within Wallet. We've also got another product for pay after delivery that we offer. So payments remains the core. Some of the stuff we're building around it, particularly as it relates to shopping tools. We've purchased Honey, which is a global shopping business, around 12 months ago now, which gives us the ability to actually add a range of functionality within Wallet to look at things like offers, give customers the ability to maintain shopping lists for products, which is quite interesting on a retailer standpoint because you can start to make markets there. We can say that we've got the pair of jeans I'm wearing, I want to buy them for $100. They're currently $120 across all retailers. We might have 1,000 people who've got that stored in a shopping list saying they'll buy it at $100. We can then start to go out to the merchants on the other side to say, hey, we've got 1,000 people here who'll buy this product at that price point, and start to bring together the two sides of our network to drive value. As well as obviously some other tools there. I know I'm probably running short of time, so what I might do is dive into one other piece on the payment side, which is around crypto, and our move into, We've started by making crypto available to buy, store, and sell within PayPal, so an investment use case. But we've more recently enabled it just over the last few weeks in the US to also allow crypto to be used to purchase. So I thought I might just provide you with a quick demonstration of that. And you can see my boss buying some Cowboy boots.
I'm gonna buy crypto boots, I'm gonna call them, and let's see how this looks. So I'm gonna go to one of my favorite websites, Bronco Western Wear. I've now selected these, and I'm gonna go look at medium. Oh, great. Okay, and that's my size, 9.5. Go to checkout right now. You can see I'm gonna go to checkout. Okay, and I'm going to click on PayPal. What else? And place my order. All right, here we are. You can see that I'm recognized on the device, which is super. So easy. All right, so here's my different card, my funding instruments. So here is my Bounce. Here's my MasterCard, my American Express, my Visa. And here is my Bitcoin Bounce. Let's see, I think I have Ethereum as well. And that's my Ethereum Bounce. So I'll go back to Bitcoin. And I am now going to use Bitcoin to pay for my purchase. So I'm going to sell Bitcoin to continue. And now instantaneously, it's selling my crypto and it's going to pay for this. Okay, boom, and there you go. That's as simple as that. So that's pretty cool. Like, you can just use your crypto Bounce as a funding source like you would your PayPal Bounce or your credit card or your debit card. It's just another funding instrument, and it was that easy and that fast. That's really cool. And I've got the first pair ever of crypto purchase Cowboy boots. Thanks, everybody.
So Dan only wears Cowboy boots or thongs, depending on the weather. He always wears jeans, a black t-shirt. It's the only way I can tell whether he's in a cold or a hot climate when you see him on video is what pair of shoes he's wearing. But that's an example of crypto. I think one of the key risks of crypto in the past was around the timing of the transaction. But the fact that we're holding the crypto on balance on behalf of the consumer, we can effectively remove the downstream kind of sale leg from the actual transactional leg upstream, which allows us to actually move that into an actual viable payment type, which is, I think, quite unique. I know I'm running short of time. My last slide is just around our view to our merchant customers, our business customers, which is obviously slightly different to the way that we work with consumers on our platform. But basically, you can see there what we believe is we've got our PayPal Commerce platform that has an end-to-end range of tools that merchants can utilise depending on the payments use cases they've got. We've got the ability to check out, obviously, with PayPal or with any other payment types, including alternate payment types. We've bought our Hyperwallet business, which does kind of global payouts. iZettle is our in-store point-of-sale offering for small businesses. Similarly with our fraud management service, and then I already covered Honey, which covers our marketing. So we're able to provide kind of a full range of services to a merchant to cover pretty much any of their payments use cases. And then obviously that also then connects out to our global network of consumers. So we're able to actually build end-to-end experiences given our two-sided network to our almost 400 million active accounts we've now got globally. So thank you for having me. I think that's probably my full time. I think got time for a couple of questions. Everyone's running a few minutes late, so time for a couple of questions if anyone has one.
Hayden from Nat Ventures. Thanks for the presentation, mate. So I noticed when you checked out with Bitcoin there was at 55,000 or whatever. Let's say that entered your wallet at 50,000. That's obviously volatile. So there's a tax implication for that. Doesn't that well, I won't lead the witness, but how does that actually work in terms of the consumer at the end of the day, either just creating potentially more life admin and headaches for themselves in the future?
Yeah, well, I think they've got the admin anyway based on any of their crypto sales. So I think we make that clear. I don't know if you saw it in the checkout experience. It does say this is taxable. We obviously provide them information on what they bought and sold at, which allows them to kind of work out what they've bought and sold for. My view of it is, in the crypto sense, there's definitely a bunch of micro investors taking place here. It's probably more of a use case where, someone's gone in and they've bought $1,000 worth of Bitcoin, which is now worth, $3,000, and they want to go. They've had a big household appliance they've been putting off a purchase on, and they've actually now effectively made enough money to make that purchase, and that's kind of taking place. I think they're the kind of use cases we're seeing now. I think personally fiat is an even more exciting space because you obviously don't have some of the same challenges around that, but you can utilise the same technology and the same learnings that we've got through this. We've actually set up a global business unit purely focused on blockchain, cryptocurrencies and digital currencies, which is working with kind of the regulators globally to try and take these initial experiences we're building and take them into some of those other areas.
Thanks.
I was going to ask, in the crypto payments example with the boots, is there transparency around the cost of settling that trade on the blockchain before the purchase?
Yeah, I don't know if you saw it there, but it gives you a rate, and then we've obviously got a spread on rate that's disclosed to the customer.
Hey Peter, Trevor from Split Payments.
Yeah, good to see you,
Thanks for the
mate.
talk. Just crypto seems to be the hot topic. When that purchase is happening with crypto and Bitcoin, who is actually? Because I'm guessing that's happening off chain and somebody's managing the liquidity.
Yep.
Is that PayPal or are
Yeah.
Are you partnering?
Bit of both. So we partner with an exchange today to do. So there's two sides to the transaction, as I said. I think we've got a lot of experience kind of sitting between payment systems where maybe the settlement is slightly delayed from the front end of the transaction. If you think about, ACH globally, direct entry for the locals, we're doing exactly that, where it's potentially delayed by some days. So the same thing can occur here, where we obviously know that we're holding the balance on your behalf with an exchange, and we can then process the downstream transaction subsequent to doing the upstream transaction, if that makes sense. So that's the way that's being run. We just bought a company, Curve, which is a crypto storage and security company. So that's part of our future strategy, is probably to look at where some of this sits.
Thanks.
Yeah.
Hi, Peter. Thank you so much. That was awesome. Just on the embedded finance piece, because I know someone sort of laughed when you said, oh, you're watching a Netflix thing and then you can buy something, which they already have interactive Netflix shows.
Yeah.
I'm always interested a little bit in cybersecurity. Australians are naturally very trusting culturally in comparison. And obviously talking about blockchain, a store of currency, everyone's minds are there. But are you looking at anything in terms of, you guys are very instrumental in tokenization earlier with payments. Are you interested in digital identity, smart contracts for people to protect themselves from themselves, biometrics, that sort of stuff?
Yeah, I think there's a few pieces to that. I think fundamentally the way that we probably look at it slightly differently, in that as a payment type with PayPal, you kind of get buyer and seller protection built in to it, and then we provide the kind of various security layers around the wallet to then, because given we take the risk in most instances, if either the seller's fraudulent or the buyer's fraudulent, then we'll sit in the middle and make good the aggrieved party. So that's the way that we would probably think about it, rather than necessarily embedding smart contracts or doing anything in that way. But we do believe that having kind of trusted payment solutions available within these new contexts is important, because consumers are looking for that safety, security, when they're trying a new thing. So as we talk to providers of these services, a lot of that narrative is around how you're making sure you've got the right payment types there that give consumers that safety, security and comfort trying something for the first time.
Pat from ENX, how you doing? Good speech,
Hey, mate.
thank you.
Good to see you, mate.
How much momentum does QR payments have in Australia right now, and what's your prediction for the next 24 months, how you see it playing out?
Yeah, I think momentum's probably a good word. I think it has got a bit of momentum. I'm not sure there's a lot of volume there, Pat, but I think it's definitely got a bit of momentum. If you think about some of the kind of central work that's happening through folks like FPOS, I think kind of pre-pandemic, you definitely had overseas customers coming here and using other QR code-based wallets, which was a big push, which I think did enable a lot of retailers with the capability to do QR codes. So I think there's a good seeding of retail capability. I think there's not a lot of volume there today for domestic, but there's a lot of momentum towards that with people bringing to life solutions, PayPal included.
Hey, Peter. Andrew up the back here, mate.
Yeah. Hey, gotcha.
Thanks for your time today. I'm actually keen to understand who you think your biggest competitors are and just get a bit of an understanding of the different ecosystems with Apple and the banks and Google Pay and yourself and incumbents and non-incumbents.
Yeah, we offer kind of a really broad product set, and the answer is quite different actually when you think about it with a consumer lens, a merchant lens, even within the merchant space, looking at different product offerings. The way I think about it, most of our business is online today, so I think about sort of the full bricks and mortar as probably the key opportunity for us. Australia is one of the lowest penetrated global markets with online. It's about 10% penetrated, so there's just a huge amount of volume that currently exists in store that could be digitised, whether that's cash, whether it's kind of current other in-store payment methods. So to me, that's the biggest untapped opportunity that we see as a business. Like, we've obviously got competitors in the various segments that we play in, but to me, that's a zero-sum game, right? Competing against competitors for that limited pool. It's how can you actually grow the pool and get access to the remaining 90 is the way that I think about it. How are we going?
We'll wrap it up there and head to the next session. Thank you so much, Peter. It was great. And yeah.